Hello guys, welcome to the Trading Parrot. Yesterday we broke our support of 63k and I want to talk about what's the current damage that implies for the upcoming month of August. We're going to look at the CPR levels. Those are freshly new in the chart and are going to help us navigate the new month. I'll give you an update on the Big Whale Explorer on the 4-hour. Now we have a clearer picture of where could we be entering with a long. Let's discuss that in more detail. Guys, if this is the type of content that you like to watch, make sure that you're subscribed to the channel, hit that notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, watch this video until the very end and do not go anywhere without leaving a comment down below. Those two things are screaming at the YouTube algorithm that this content is worth watching by more people. So thanks so much for that. And thanks so much to Barron Netwerk, particularly to Chris, for inviting me for a second time to come to the channel to do TA on different altcoins and Bitcoin. Yesterday, I made an appearance on this video, altcoin technical analysis with the Trading Parrot. The intention was to review some altcoins that the SEC has pulled out from the lawsuit. Therefore, they were looking bullish from the fundamental point of view. But since I always give my honest and biased TA feedback, most of the coins I ended up saying that we are due for a pullback. And I felt quite bad to be telling people that we are due for a correction. Right now, Solana is at 168. So I think it was the proper call to make aware users instead of just going with the hype, the good news. And that proves my point that TA is always 2 steps ahead of the news. The same goes with XRP. XRP yesterday was surpassing the 0.62 top that I call mid-July. After this impressive pump, I said 0.62 is the top. I published that on Twitter. Since then, we built this flag and we made it almost to 0.66. At the time I was recording the video, everything looked very bullish. There were so many longs ready to get smashed. Of course, BTC with the pullback also helped with that. I wasn't even sure if we were going to break down or break out with Bitcoin. There was a chance we were going to break down because we had the head and shoulders and we needed to monitor that. As soon as we had the breakdown from the head and shoulders, XRP pulled back down to 0.6. That's quite a big retracement, and I'm glad I stick to my principles. Initially, I felt guilty of being so bearish, and while the coins were still bullish, people were complaining in the comments, how can you be bearish? But this is what you get pure unbiased. So let's continue doing that. When it comes to the CME Gaps, we got rid of 2. That's great news, but we still have this one here. I'm going to show you some structure that we are about to break on the 4-hour time frame. Breaking that structure is going to make a lot more likely that we can go to the low 60s and finally close the CME gap. A few days ago, that structure wasn't even close to getting broken. And that's why we were saying potentially we need to wait a lot longer for this CME gap to get filled, or maybe even we won't feel it. Let's start with the 4-hour and the CPR. Then we're going to go to the daily time frame and I'm going to show you what's the current impact on the weekly time frame for Bitcoin and the Megaphone pattern. Those 2 things are a must watch now that is the 1st of August. Looking at the 4-hour, when we were here, we were scratching our heads. Can we really use this as a breakout? That was my question a few days ago. It seemed to be breaking out, but it was a very humble move, pretty much looking like a bear flag, just like this one in here. And now that we can connect these 2 dots and we can see that the RSI is giving a kiss to the 34 level, we can start thinking, are we going to see a breakout from here? Are we going to see another rejection and then a breakout later on? I think that's going to be our main focus in the upcoming days. If we were to break out from these levels, I'm looking for a target now. Instead of being 67 as a couple of days ago, I'm looking for 64, 65. So let's update this to 64 and let's see where is that in the price action. At the moment, 64 is located almost at 69k, and that will pretty much break all these fair value gaps. Another important thing I want to mention is the structure of the 4-hour. You can see here that we have higher highs, higher lows. It's still higher. So the structure is not damaged yet. It's curving towards a breakdown. Sure, there are bearish divergences, sure, but the structure is intact. And with this movement in here, with a low of 63.6, we are still putting a higher low, which is pretty annoying because it leaves us with this ambiguity in the charts where we cannot 100% confirm that the structure is broken on the 4-hour. We can also see that the new CPR levels for the month of August are available in the chart. I'm going to highlight them here. If we zoom out, you're going to be able to see the levels of resistance at the top in green and support in red. Interestingly, this doesn't look that different from the CPR levels that we have in July. And this is a consequence of so many months going sideways. Levels of resistance are located at 71.8, 79.2, and the top one is at 88. Below the price, we have support at 55.5, 46.1, and 38.9. All of these levels are doable for the price within the month of August according to the CPR model. The CPR model says that if we go to the first level of resistance in 1 month, on the next month it's very likely that you go to the first level of support, particularly if you see a rejection right after. And what we can see here in the chart in the month of July is that clearly we didn't even manage to touch it. So now, from the perspective of the CPR model, it is less likely that during August we go to 72. It is more likely that we are going to 55.4. This is not my forecast. This is what the model says. So don't shoot the messenger. Let's go to the daily time frame. You can see here that the head and shoulder finally broke down from the neck. Our target was 44 on the daily, and we could say that we had done at least around a 60% of the full target. Let's update the target to 44 to see where could that take us, and that coincides today precisely with this long-term trend line that we have here from October 2023. If this takes the full target, that will land around 63K, possibly slightly lower. In principle, if we go there, we have a strong argument for a bounce. Ideally, at that point, the 4-hour time frame will have already bounced and broke out from this range, targeting that top of the range at 63, 64. But if we were to break once again this trend line on the daily, we could be seeing Bitcoin going for the first level of support on the CPR monthly, which is pretty annoying because that will confirm that we are going for the yellow path. You can see that right now we are within the bull market support band. This can still be fixed because the weekly is in progress. You can go as low as you want, but if the weekly closes above 65, 66, then we can still claim that the plan A to break above the Megaphone pattern in a shorter term is still viable. But if we close the weekly below 62, we can take almost for granted that we are going to print some sort of low around this area to finally find a spring that can take us out of the Megaphone pattern, hopefully from the top. And I think it's worth always keeping an eye on the Big Well Explorer. You can tell that today the deposits are just going completely mental. This ratio today is 2.22. That is higher than the amount of deposits that we had at 73.5K. If we go back in time and we look at areas where we have big deposits during a bull rally, we can certainly tell that those are wells that are planning to sell. For example, this one was in here. Shortly after, they sold big, causing a 30% drawdown. That wasn't necessarily the top of the market, but when you see the ratio going this high, it just tells you that they are preparing to sell. You cannot tell when are they going to sell, how much are they going to sell, but you know that there is danger. Same happened around here where the ratio made it to 2.56. Shortly after, we had a top right there, and in 2017, we have a ratio of 262. That's the highest that we can see in whole Bitcoin history. That ended up selling 35%. But again, that wasn't the top of the market. That's kind of the behavior during bull rallies. During bear markets, big deposits tend to crash the market a lot more with continuation to the downside. So don't expect that always when there is a big deposit, there is a substantial correction followed by another rally. That only happens in bull markets. Interestingly, yesterday we started seeing bullish divergences on the S&P and the NASDAQ, and the NASDAQ seemed to have found support on our trend line. Yesterday, we were slightly below it and it got all bought up, pushing higher. One thing that calls my attention today is that if we compare the performance of Bitcoin next to the S&P or the NASDAQ, you're going to find that during the first third and the second third, the legs up of Bitcoin were coupled with the indexes, meaning that both were going higher, the S&P and the NASDAQ, together with Bitcoin. And they got decoupled right after the all-time high. As soon as we got an all-time high, you can see that the index and Bitcoin corrected, but right after that, in this rally in here, S&P continues going higher, whereas Bitcoin doesn't put a high. In fact, it puts a low, breaking the structure. So S&P hasn't broken structure, Bitcoin has. Similar picture you get on NASDAQ. This rally and that rally there both came with Bitcoin following the same direction. But this rally in here, it comes with a big pullback on Bitcoin. So the question is, if NASDAQ and S&P were now to bounce on support and give us that 20% towards a new all-time high in the indexes, what should we really expect? Bitcoin to continue decouple and printing lower lows, or Bitcoin once again coupling with the indexes and following the potential bullishness of the indexes? Let's do a recap of what's going on with the weekly. We managed to recover the range on the weekly. We made a bullish breakout as well. It was a humble one here around 60. And if you notice the detail, it's almost going sideways. It's not as bullish as if we had a breakout like this, for example. And right after that, during this week, we are now pointing down. We're back in a breakdown area, losing all momentum on the weekly, looking pretty much like if this whole breakout was just a fake out. So this week, price action on the weekly is extremely important. And this chart is the one that is going to be able to tell us whether price action is going to have a really bullish August and September, or if we're going to go sideways, or if things are going to get really ugly. If we were to close the week pointing up, that will be extremely good news. If we were pointing down, but still above this yellow line, that will be mildly bullish, potentially sideways. If we were to point down, but below the yellow line, that is bearish. Staying around here in this area, but higher than this, it's something that we can still recover later with another breakout from a lower range. And that could be the path of the yellow breakout from the Megaphone pattern. If we were to put a low in here and go to these levels of the RSI, that will be massively bearish. And the area that we are not allowed to enter is below 40 on the weekly, because that is the end of the bull market. We have never survived a weekly RSI below 40 and later put a new high. All you get at that point is just a dead cat bounce. I'm happy to see that the fear and greed index has reset to 52. The lower we go in the fear, our breakout from the 4-hour is going to have a lot more validation. Breaking out while being in the grid at 70s can still make a higher high, but the risk is also a lot higher. When looking at the liquidation levels on trading different on the 5-minute, we can still see that many levels are being created in here. So there's still some stimulus for the price to go after 62K. But if we look at the big picture on the yearly, you have a great argument to say that we eventually need to go for that 72.6K, because at that point, there are liquidations for almost 35 billion. And right now, in terms of fair value gaps, we can start saying that we have more of them at the top than at the bottom. We haven't checked the FAR charts in a while, and you can tell how much selling, how much ask liquidity there is above 70K right there. And that was placed at 69.5 right after the Trump speech with the intention to sell the news. Yesterday in the order book, we saw something slightly new. You can tell that there was quite a lot of interest into buying 63.4, 63.7, and the price has bounced and starting to put another bearish flag. And I think that's why people are now placing orders below 62. On the monthly, we ended up closing without a bullish cross on the stochastic RSI. This month, they are still pointing at each other. That is subject to holding around these levels. If we saw the price of Bitcoin put in a new low, the stochastic RSI will open again the mouth and point towards the bottom end. And I remind you again that if the stochastic RSI makes it below 20 within a bull market, that is the end of the bull market. Not a single time that we have made it in the monthly stochastic RSI to 20s without finishing that bull market. For example, this is the end of 2013 bull market, this is the end of 2011, this is the end of 2017, and even though we fell this low to 36, the actual end of the bull market was in March 2022 when we made it below 20 finally. So what do we need? Well, we can afford to go as low as that if we were to do as bad as in COVID, but then shortly after, we must do a bullish cross and come back to the highs. As soon as we enter in this range here, the bull market is over. And guys, I'm hosting a 500 position airdrop. There's a link at the top of the description with all the instructions. You trade with $100 and you get $500 for free additional. And if you use my referral link to open a new account on Bybit, you can claim up to 30,000 in rewards. I do recommend that you go into my Discord server, head down to Bybit Perks, and then connect your Bybit UID so you can claim 70% off all the Trading Parrot subscriptions on the website. That will give you access to hundreds of different indicators that are going to help you navigate the market, backtesting tools, trading signals, and a lot more. And don't forget to pay a visit to the strategies on Discord. There's plenty of value for free. For example, the code to the RSI version that I use in all my videos is open. You can download it. There are also some setups for bots on Gainium, plenty of backtests. Some of them require Observer tier or VIP, but it's a great place to start browsing around for new ways to trade. Thanks so much for watching. I'll see you in the next one. Take care. Bye bye.